Okay, here we go. That's us, Line Finance. There should be two of us, and every month I say Elena's not here, and she's still not here. But we'll be next month, and you'll get her instead of me. So, some good news for you. What do? Business type thing we do. We do HMO properties, service accommodation, complex buy-to-let, commercial development finance, and commercial mortgages, government growth scheme. Great scheme for companies buying their own commercial premises at the moment. It's still around, no one says anything about it. It's a great little scheme. And we help finance all those sort of stuff. So we don't do first-time buyers, home movers, all that sort of stuff. We do stuff that's slightly more niche or complicated. I was asked ages ago, what do I put in a presentation? And Julia, and this is Julia's fault, said, doesn't matter, just do something interesting. I work in finance, how does that work? Do you know what I mean? So what we're going to do is, did you know the Romans were responsible for how big Space Shuttle was? This is my interesting thing for this evening. They were, because NASA wanted a bigger space shuttle, and that required bigger booster rockets. And the booster rockets came to the assembly building by rail. And the size of the rails on the trains in America were driven by the size of the rails in this country. And we built our railways on Roman roads. And so the width of the wheels on a train were the same width as a Roman chariot. 2 horses' backsides. If the rails in America were bigger, they could have had bigger booster rockets and a bigger space shuttle. And the reason why they can't is because they could only fit a certain size of booster rocket on the train, and all of that comes down to the Romans and how big their chariots were. So that's why the Romans influenced the size of a space shuttle. And we'll be coming back to that because it matters. Swap rates. It's in the news. I'm getting asked a lot about swap rates at the moment. So I thought what we'd do this month is tell you a little tale about the wedding, the food and the guests. In other words, I'm going to explain swap rates to you as quickly as I can. The bride, she wants a wedding reception of 150 guests in 6 months' time at a swanky fish restaurant. Why wouldn't you? She wants certainty. She wants to pay £50 a head for those guests. Okay, the restaurant wants business, but they've got a problem. The wholesale price of fish fluctuates every single morning based on the weather, the fuel cost, quotas, etc., etc. If the price of fish stays low, we're in for a winner. If a massive storm hits the North Sea, prices will rocket. They're going to cost them more for their fish and they're going to go out of business. So the restaurant says, I still want your business. So they make a call to Mr. Fishmonger and propose a deal. They say, let's lock in a price. The next 6 months, I'll pay you a guaranteed fixed £25 a head for all the fish I need. If the price goes up, you absorb a loss. The price comes down, you keep a profit. The fishmonger will look at the long-term weather, the quotas, the fuel, calculates the risk, and he agrees the price. That's all pretty standard. That makes sense to most people. To put it into a term of what's a swap rate, what's an interest rate swap, well, the bride, that's your borrower, the restaurant owner is like a high street bank, the fishmonger is the swap market, and the fish price is like the SONIA of a banking and base rate. It's all about what happens outside of someone's control and how they mitigate it. Ergo, if energy prices go up, inflation goes up. If inflation goes up, people want a bigger return. Therefore, swap rates go up and the cost of money goes up and the cost of what you're paying for your borrowing goes up. As with most things financial, people think it's complicated. That's because finance is made complicated for no particular reason other than to make it sound complicated. It's not. The other thing I'm asked is, what will happen with interest rates? And I can answer that quite simply now. It depends on the price of fish. And it does. It really depends on what else is going to happen in the world. You've all got access to the same information as everyone in finance has got. So look at what you got, make your decision, and you decide what you think is going to happen to interest rates yourselves. Back to these guys. The reason why this one's here is because what the Romans did years ago influences what can happen now. And that's important because year-end accounts, and I'm going to look at an accountant in the room now, what you did in your accounts ages ago can influence what you're going to do now. And the reason why I want to put this up here now is because end of June is a really popular year end for financial trading accounts. And Q4, which is coming up on us shortly, is when the March and April year end accounts are typically filed. All I'm saying to you is when you're doing year end accounts, please consider any future borrowing plans. Okay? Because your accounts are a line in the sand moment, and it's worth thinking about what you want to declare in terms of how much affordability will I might need to show for what I might need to borrow next year. affordability for a lender is always backward looking. They always look back at what you've done. So we see an awful lot of clients who have stripped out their accounts, made absolutely zero profit. Their tax returns show that they earned very little money, and yet they'll rock up outside our office in a brand new electric Porsche. Do you know what I mean? It doesn't make sense sometimes. And they wonder why borrowing's more difficult than it needs to be. Just plan ahead when you're doing your year-end accounts. What's this? Come on. Who's that? Share. For sale. Yeah, this is about properties. This is about share sales. The vast majority of property these days is owned in an SPV, in a limited company. And what we're starting to see in terms of finance is more and more share purchase rather than property purchase. So people purchasing the whole limited company with a property in it rather than the property as an asset on its own. And one of the reasons behind that is stamp duty. And the amount of companies we're seeing formed to buy property is going up and up and up. And therefore, these properties at some stage have got to change hands. And we're starting to see them change hands through a share purchase rather than a traditional asset sale. Lenders, as always, are slightly behind the curve. It's going to increase the trend. It's a very different proposition to borrowing in terms of just buying a property in its own right. Lenders are behind the curve, as I say. They're slow to react to it. We're seeing more of these transactions. We can do them. They're fine. Just need a bit more understanding. But it's something we are starting to see more and more of. Last month, I said we launched a new website. If anyone can find an error or a problem with it, I'd give them a prize. Sadly, nobody came back to me. So about 2 weeks in Bermuda, I'll take it myself. If anyone has a look at the website and can find something that's spelt wrong, doesn't work, please do let me know. I would appreciate it. And that's it for me. Any questions with regard financing or financing property, commercial units, get in touch. We have free coffee. It's good coffee. You're more than welcome. And we'll even throw in some biscuits if you want to have a chat. So always around. Just give us a bell when you want. Okay. Thank you.